Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. Real quick, check us out on Twitter, on Facebook, and on YouTube. All of those platforms, just go to the .com URL and do /Tusk Media LLC. So we're everywhere at the same place. Shout out to everybody on Seeking Alpha. Leave us comments, feedbacks, questions, all that good stuff in the comments below. We're going to be hitting a lot of content over the next couple of weeks as we kind of swing back into earnings season. So talking a lot about a lot of companies, many of which we own. We talk our book some because those are the companies we own. Today we're going to be talking about a company that reported last week, Oracle, ticker ORCL. We own some of this in our portfolios. And in the interest of disclosure, we actually trimmed some heading into earnings. So for those who think we maybe just tout winners, no, we kind of missed this one. We had some hesitation. We talked a little bit about how it might be an inflection point for the company, and we'll come back to that a little bit more. But at the end of the day, we kind of pulled the trigger on a move that maybe we now regret. But what were the highlights from the quarterly conference call and earnings reports, Ben?
Yeah, so it was just a phenomenal quarter. There isn't any getting around that.
Yeah.
The company last quarter came out and said, they did their whole usual thing where they have so-so results, have so-so guidance, but then say how everything's going to be so great and how they're beating Salesforce and they're beating Workday and they're competing against Microsoft and they're doing a really good job. Meanwhile, they're paying hundreds of millions out in stock-based compensation. They're not really returning that much to shareholders, and the business isn't really having that much growth. So that was kind of what informed our sale. I know it just seemed like this was a story of, okay, next quarter. Our initial buy price that we had targeted was $40. And, it was $46. And we're like, well, if it drops back down to 40, I'll be a buyer. They came out with this quarter, and they, just hitting some of the highlights, adjusted revenue $10.94 billion versus estimate $10.45. EPS 89 cents, estimate 78 cents. Operating margin 46%. The cloud as a service was growing in the low 60% range, more than making up for the declines and slow growth in traditional hardware and licensing businesses. And the gross margin in the cloud business expanded by 11 percentage points year over year. So, you just look at a lot of these metrics and it just beat. Mm-hmm. And they said that this is not a one-quarter phenomenon, it's not a one-year phenomenon. The guidance for next quarter was that they would earn double digits more than they did this year. And, all of a sudden this company has a narrative of a transformation story, where it's going from something that's more similar to IBM to something that's more similar to Microsoft, kind of going in that same vein.
Yeah, you're kind of having this, I think one of the big keys that we're looking at is really kind of this transition to the service side of things. Yeah. There's kind of two ways you can view, hardware as a service almost, and how you view that. And there's, I think, the way we tend to be skeptical of it is, well, what happens when someone does that cheaper, better, what have you,
right,
and what happens to that recurring stream of cash. But as we're seeing with Oracle, and one of the things they kind of pointed out to is just by creating their own hardware, they're able to offer a lot of the cloud-based services at a significantly lower cost. That's really differentiating them, and it's starting to show not just that it's in progress, but that it's working.
Yeah, and the thing is, you don't have these huge inventory builds because Oracle is in control of. If Oracle wants to start a data center, they'll fill it 75% on
right
day
there.
one. So they don't have these big gaps in cycles and these compressed margins. So Oracle can be more efficient, more agile with that. In terms of the B2B market, they are the largest player in enterprise resource planning. So if business confidence and CEO confidence, now they can say, we can invest, and we're actually seeing returns to ERP, which, quite frankly, from my perspective, I thought it was always just kind of a fancy word that meant a lot of money for IT specialists and a lot of headaches for management.
Right.
But I think we are starting to see places where this ERP is really reaping benefits. You look at FedEx, we did a video on them. They continually need improvements in logistics. You talk about retail. I mean, that's the only way they can find savings now, is being more efficient with their inventory and being able to tailor that to tailor resources, tailor scarce resources, and allocate them effectively. And that's what Oracle does. And so Oracle's very bullish on that. And if you do get that business confidence and businesses spending money on saying, okay, we're going to implement this, then once it's implemented, because they're being sold as a solution, as a service, Oracle gets recurring revenue from that, which should be very high margin. One of the problems I have with Oracle is that they spend tons of money on selling expenses, which you could argue is a cost of goods sold, because selling expenses is such a huge portion of when you actually have a piece of software, selling is the incremental cost. But for this, it's a recurring revenue stream, so that selling expense really is a one-time deal. A company doesn't want to go in every 5 years, especially every 1 year. They're not going to go and change it. They're just going to pay the money.
Right.
So I was really impressed with the story that Oracle told. I was impressed by the numbers, and man, it really has me reevaluating the company.
Yeah, and I think one of the things you touched on it specifically on the retail and the inventory side of these companies that are getting pressed, and they're really facing pressure in terms of how do we actually sustain the bottom line, because the top line's coming down. Their ability to help out companies like that is going to put them in a really unique position just among any company.
Right.
And another company that they mentioned on the call was AT&T.
Yeah.
And we talk about telecom companies, and we own AT&T, we own Verizon, and kind of the running joke both on the podcast and in stocks is kind of that it's a race to the bottom, not just to plan pricing, but for the stocks. I mean, they've had a tough time. But if you're looking at somebody like AT&T and they're looking at something like Oracle and saying, hey, maybe this ERP can actually help us become more efficient, all of a sudden Oracle's in a great position for massive companies to actually add value.
Yeah, and full credit to them, because they've been battling analysts and investors for a long time, and at the end of the day, I mean, what we're seeing is that this shift is working. And it's a shift that's similar to Microsoft, but it required new managers at Microsoft. It's a shift that's similar to Adobe, moving to more of the service side. And, you could see that valuation re-rate. So not only are they having better earnings, but you could also see a higher multiple as well. I'm not saying that they will have a higher one, but all of a sudden when people were talking about the tail risk being to the downside, that it completely gets that it gets competed away, this Oracle legacy business. Now all of a sudden you're seeing the tail risk to the upside.
Yeah.
The skew on the distribution of outcomes has changed from the downside to the upside.
So, and kind of with that, we're having to kind of rewrite some of our stuff. We mentioned we trimmed some of the position heading into earnings, didn't sell it out, still own a decent amount, but we kind of did a big rework of price targets. The way we do things behind the curtain is, hey, we have various buy points, working from hey, here's where we take an initial position, all the way down to here's where we want to be overweight, and then on the other side, on the upside trim, and then an exit price. But pretty big, sizable shifts there, because we think that the narrative, I don't know that the narrative's changed, but all of a sudden the numbers validate the narrative, which was not necessarily our expectation prior to this quarter's earnings.
Yeah, I mean, we're in a position now where we will actually feel good about buying it, if we can buy it, even though it's higher than where we sold it, which is a weird scenario, and just tells us how wrong we were in our initial view.
Exactly. So we'll certainly be continuing to hold it, looking for attractive buy points where they come in, and looking to continue to move into position as it makes sense. And then on the upside, if this thing continues to run, just kind of continuing to reevaluate the numbers, reevaluate the story, and reevaluate really even management and how we're perceiving their commitment to what they're doing. Anything else in closing on Oracle?
That's all I had.
Great. Thanks for being here. Again, check us out. Hit subscribe on iTunes. You can find us, search Tusk Media LLC. We will be back later this week.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.